Hey everybody, welcome back for another cryptocurrency news article. Hope you've been well. Now today's article comes from the Bitcoinist, and Bitcoin wills, not retailers, are safe if the United States government begins confiscating coins. What? Why? Why is that fair, and why is that, you may be wondering? Well, most likely because the wills are holding their crypto in non-custodial wallets, which means they're in control. They're in control of their private keys, they're in control of their seed phrase. And most of the other people just tend to leave them on exchanges and hope it's all good. So, no, if you don't want to be like those people, do what the wills do. Again, don't do what they say, do what they do. But yeah, let's go over this article because I know so many people are wondering that question. It's like, how can they? Wait, what? They can take from exchanges, but not wallets? But yeah, let's go through this article and hopefully it sheds some more light on it. But Willy Woo, an on-chain analysis, took to the X on April 29th, raising concerns about the fate of retail Bitcoin investors if the world, especially the United States, plunges into a recession. Now, Wu, referencing historical events, argues that while large Bitcoin holders or whales are likely to weather the storm since they control private keys of their coins, retailers or everyday Bitcoin investors might face a different reality. Now, who will be safe if the United States government began confiscating Bitcoin? Well, the analysis compares the current market and economic downturn of the Great Depression of 1930. During that time, the United States government, we warned, seized gold from the public to replenish their national reserves. And here we get a chart of that. Now, Wu now raises the question on whether a similar scenario could unfold with Bitcoin. So, could the government take our Bitcoin like they did with the gold back then? Well, if so, it could potentially lead to more severe consequences for retail investors. Now, whether the government will succeed or not will largely depend on one crucial factor: Bitcoin storage. Now, sharing data, Wu notes that a staggering 87% of Bitcoin is held in self custody wallets. For instance, through these wallets like Samurai, well, I didn't want to say that, that's what the article says. Let's say Exodus, Divi, Trezor, like wallets like those, individuals control their private keys, meaning they can sign transactions proving that they own coins. And if you're wondering why I didn't want to say Samurai, it's because I really don't know that wallet. I don't know how well it is. I think I've been seeing some things in the news with that name pertaining. So it's like, yeah, I just didn't want to say it. And there you can see it. That's what they put in the article. So sorry that I diverged, but let's continue on. So where were we? Let's just continue from back here. So they were talking about private keys and like who will succeed if not. But let's see. Meanwhile, 1% of the roughly population are held in exchanges and ETFs. Okay, so this is showing where the Bitcoin is right now. So 1% is held on Bitcoin exchange traded funds. So like BlackRock, Fidelity, the spot ETF issuers, basically from the United States, offering competitive and low rates, have been rapidly buying Bitcoin from multiple sources, including via exchanges and over-the-counter markets to meet the rising demand for investors, including institutions. Now, according to Look On Chain data, by April 26, all spot Bitcoin ETF users held over 834,000 Bitcoin less than 3 months after their launching. Here we can see the trust holdings and like which one holds where. This is BlackRock's IBTC. They hold around like 274,000. Fidelity, second highest, and then the other guys down beneath. But let's see, on the other hand, 12% of all Bitcoin sits on exchanges like Binance, Kraken, Coinbase. Most of these coins belong to investors or traders who are actively engaged through centralized exchanges. And Bitcoin holders, though not in control of their private keys, can liquidate for altcoins like Cardano, fiat like USD, or even stablecoins. Now, United States inflation is rising, and GDP data, soft recession, is incoming. Now, while most BTC is held via non-custodial wallets, Wu said that this route is taken mainly through whales. On the other hand, most retailers, meaning me, mom and pop, well, not me because I do it the right way, but retailers in the financial mean poor people. Let's just be honest. Let's call it what it is. I think I heard Michael Saylor say is like, let's be blunt. So basically the poor people out there who don't take custody of their assets, their money, hold their assets on exchanges. And roughly this is 12% that the article is saying. Yep, 12% fall into this category, which is keeping their coins on these centralized exchanges. Now, this distinction, Wu continues, becomes critical during the economic turmoil. Now, this still Still, it remains unclear who a whale is per Wu's categorization. BitInfo Charts data from April 29th shows that over 65% of Bitcoin is in the hands of those who hold less than 0.1 Bitcoin. So, where do you guys fall on this line? Like, are you in the 65 percentile where you're just holding zero point 0.1, or do you have a little bit more? And here's that chart showing like it. But that's pretty crazy though. 65% are in well, if you can see my mouse, this category and above. So, and not so many people here. And like, there's 3 people who hold over 100,000 to 1,000,000 Bitcoin. So that's crazy out there. And then this article doesn't really go through also like the Bitcoin we assume is lost and gone forever. Like, I want to think that's at least 9%. So 65% is held in small hands, 12% in ETFs. Then you got the other companies out there. So on those charts, like, could have been MicroStrategy, Michael Saylor, those types of whales out there. So I say anything from 1 and above would be considered a whale then. But yeah, let's continue on about this article on the rising inflation. So some analysis worry that rising inflation prices in the United States and a falling real GDP, as economic data shows, might plunge the country into a recession. For now, eyes will be on the Federal Reserve and Jerome Powell when they set the country's interest rates this week. So let's see what's going to go on there. But no, that was it. So yeah, we're just waiting to see how that's going to turn out. But we covered articles yesterday, though, like with these interest rates, like the rest of the world's really waiting on it because we saw what the Japanese yen is doing, pretty much falling because of all this. And then if you hold Bitcoin, I'm sure they're happy. Like no one's hating on that if they were getting Bitcoin 5 years ago, because yeah, they're Bitcoin to yen. Woo! If you held Bitcoin, might be a good trip to go to Japan just because of that. But no, yeah, so this article I wanted to point out, like, it's like, get your coins off exchanges. We say it all the time. This is what happened during that last bear run when, like, after the last bull run, the collapse of FTX, you're seeing people lose their money because they were in exchanges. Someone else was holding on to their cryptos. Safest way to go is get them in a non-custodial wallet. If you want the ultimate safest way, get a crypto-only laptop. I'm sure from Kinetic Solutions, yeah, follow this link down below. As you can see here from the club, you'll find a link down there. So you want to buy a crypto-only laptop, safest wallet to have. Outside of that, I like Trezor, hardware wallet. You just got to worry about what computers you plug it into. And then at least an Exodus software wallet or a Divi software wallet, you can just download on your phone. Don't keep all your assets on there, but just understand the security about it. But no, the ones who hold their cryptos in those devices and that, they're the ones who aren't going to get their cryptos confiscated by the government. It's only those that leave them on the exchanges, as this article said, and that's where most retailers do. So I hope you enjoyed this article. If so, smash that thumbs up, subscribe to the channel, and until next time, the Crypto Sherpa is out.